Hello everybody, I want to give you a quick rundown on my midpoint strategy. I want to try and make this quick, but I want to give as much detail as I can. So I've tried to make the setup as simple as I possibly can, and you can see this is my 6 chart watch list from 129.21. And the goal here is I watch this yellow line. This is called the midpoint, and all the midpoint is the previous day's high and the previous day's low divided by 2. And that plots this yellow line here, and so that's the halfway mark. This halfway mark is normally major for price action. Most of the time when you see price coming off of this level, it's going to have a big move, as you can see on all these charts here. So the way that I trade this is I use this Hall 60 moving average. And basically, so when price is opening above, well, here, we'll start here. I want to show you my indicators real quick. And I use 2 custom scripts, Hall uptrend, downtrend, and this is customized to have this uptrend box right here. So whenever price is above, and if you look at this chart here, whenever price is above this Hall 60, price is opening above that, it's in an uptrend. And when the same thing for this midpoint trend, it has the same script edited into it. So when price is above that midpoint, price is in an uptrend. So this script here for the midpoint automatically calculates the midpoint levels for you every day and plots them on every chart, so you don't have to deal with all the calculations and the math and everything. It makes things go by a lot quicker. So in this case, when you're looking for trades, you're going to be looking for both of these to be in an uptrend, both price to be above the Hall and price to be above the midpoint. So let's review these setups real quick. In this case, we started the day looking at JPM, and we assumed that JPM was in a bullish trend because price was opening above the midpoint. Now, even though price came down and used midpoint for support and bounced off of it, we didn't really technically have a safe entry. Yes, you could have played that, and yes, you could have made money, but it wasn't a safe entry because the whole moving average was so far away. Whenever you get into these trades, you can use your Hall 60 as a major support and your midpoint as a major support. So the closer together these levels are, the safer your entry is. So price bounced up here and hit your target level, and I'll show you how to draw both these target levels, or draw target levels for any chart that you want based off of this midpoint strategy once I get done reviewing this. So all these levels were drawn before the market opened. JPM hit this level, rejected it, started to come down. Now, because price was crossing below the midpoint, we're going to assume that JPM is now going bearish because it's below that major midpoint, and we know that there's going to be normally a major price move off of that midpoint. So as price drifts down, and you could wait for a candle to fully close below that line in this case. If you wanted a safer entry, if you were wanting to take a little more of a chance, as long as the candle opened below that line, it's a good entry. And so you get in right here, and if you want, you can throw like Heiken-Ashi on your chart to help you determine when to get in and out. I have another script on this setup here, but it won't be included in the charts that I'll be offering. But it very closely mimics Heiken-Ashi, and Heiken-Ashi works very well with this. So if you were to get into this trade, according to the trade plan here, you know that you can stay in this trade until price either breaks above that midpoint or breaks above that Hall average. And you can see you have major resistance right through there because that's where that Hall is. So as price is trending down, you can take profit whenever you're happy. If you set a target for 20% and take it if you want, or if you want to chance the whole trade, and mind you, these are 10-minute charts, so you'll be in this trade for a while. You can stay in this until price comes all the way down and hit your target price, or as long as price never breaks above that Hall average. Now, this was a very good day for all these charts. All your targets are not always going to hit and I'll show you a little more what I mean. but they're very strong levels to aim for, but don't always expect them to go straight to that target price. Sometimes you might get a pop off and it just doesn't quite reach it, but they're very good levels to aim for. So in this case, that would have been a hell of a trade. And even if you would have hit your target price, and if you didn't take profit, as soon as it started to bounce back up here and broke above that Hall 60, you would get out of this. No, absolutely no reason to be in this trade anymore, and you're not even looking for calls at this point. Even though it would be breaking above that Hall, it would be in an uptrend for the Hall, but it would be in a downtrend for that midpoint, so you don't have your confirmation to get into calls. Here, BA. Price was mixed at open. It started to break above or break below the midpoint originally, but you didn't have a good confirmation of entry because your haul was so far away from the price here. So especially on BA, a couple of dollars makes a big difference when you're day trading it. So you wouldn't have had a safe entry for puts there. Price caught support, reversed, started to break above that midpoint. You still don't have a good entry for calls because even though it's breaking above that midpoint, price is below that Hall 60, so you don't have any reason to get in it. It's in an uptrend for the midpoint, but it would be in a downtrend for the Hall. Price breaks above that Hall. Yes, you could try that for a quick scalp, but you're so close to your target price. What's the point of even getting in that? And if your Hall is moving down, so that makes it more risky. Price hits your target and it immediately rejects and starts to come down. So as price is coming to the midpoint, now you're going to assume it's starting to get bearish because the hull is pointing down. It's just dropping and dropping. So as price closes down through here, or if you're really ballsy and you want to get in on that midpoint, I would wait for a little more confirmation. But the point is, you can get in anywhere down through here, and as long as price stays below this whole moving average, you can stay in your trade or just take profit when you're happy. Price hits target profit, you can sell out there or stay in it, and then as soon as price comes back up above that hull, you get out. Nike wasn't necessarily the best setup. It did pop off of midpoint immediately from the bell, and it was below that Hall average. So if you were a quick enough trader, you could have got in that and got a quick scalp and hit target profit, but you would have had to been very fast on that one. The rest of the day, you never got a good setup. Every time it started to break above midpoint there, but the Hall is down here, so you're too far away. There's no point in getting it. You're starting to break out of midpoint there, but your Hall's all the way down here. There's no point because you got that level of support, your midpoint, and then your next level of support's down there, so there's no real reason to take that chance. It did work out, but you can see it consolidated a little bit there, and I mean, you would have battled that trade. These are 10-minute candles, so you would have been in that trade for a while before you would have been profitable, so that would have been annoying. So no good entries left on that chart. INTC was great. We did. I called this one out in the mornings. I played it for 3 of these candles here. I sold at the peak. I bought in right as price was breaking out of that midpoint. I saw that momentum coming in. I saw my Hull 60 was crossing up above, or was getting ready to cross up above at this point when I entered. The Hull was probably right around through there, and I could see it starting to push upwards. I could see the momentum coming in, so I grabbed a market order on the breakout of 56.05, and I was able to catch it for 3 candles. I sold out there because I was at 100%, and I was more than happy with 100%. And price went sideways for the next 30 to 40 minutes. Or popped off a little bit more and then went sideways for the next 30 or 40 minutes. And then if I had still been in this trade, my sell would have been, and as price is going sideways here, that Hull is going to be climbing. So as price closes or crosses below that Hull, you want to get out of it. Then at no point do you have a good entry for puts down through here, even though that is a nice big price movement. According to this, your price is still above that midpoint, so your price would be in an uptrend according to the midpoint, but it would be in a downtrend according to the whole to the whole moving average. So you don't have good confirmation there. Price breaks down through here. Yes, you could have scalped that, but again, your haul is so far away. There's no real good entry right there. If you were wanting to chance it, there could have been a little bit of a better entry, but you're still far away from your haul. I wouldn't have recommended it, but that would have been at your discretion. And it came down to target. PayPal was a decent one right through here. If you would have caught it, it opened up above midpoint, above Hull. So as Hull's crossing, if you caught it on the pullback on support right there, you could have caught a nice scalp as it hit the target line there. Here, not necessarily the best entry, but there's a lot of momentum. So as that momentum was coming in, if you wanted to chance it, that would also hit your entry. That I think was market sell-off news. Same thing here with Tesla. Tesla is a beautiful one. Called it in chat. and price originally opened above midpoint, but as the morning was going on, it started getting weak and weak, and I mentioned it right around through here. As price was closing below midpoint, it was closing below haul as well, and then price just plummeted straight down to target, fell a full $44 before catching support, drifted sideways. If you'd stayed in it the whole time, your sell would have been right around through here as soon as price started breaking above that. So it's really not hard to set up. It's really not hard to look for. It's really not hard to follow. I'll show you here real quick how I find my levels. We'll start with lows here. I've already looked over two charts that I liked, and just will provide really good examples here. So lows, I like this because price is right here below, or right close to the midpoint. We'll look here at Walmart here real quick just so I can show you. Walmart is really far away from the midpoint, so I don't like a chart like this. There's no reason to watch this. You're too far away from your major move. So Lowe's is very close to this midpoint, so we know we can watch this for potential calls and a potential good move. So to find our target levels, I'm going to mark this here and extend it to the left so I can see. Now, I go to a 90-day 2-hour. You can do it on a 90-day 4-hour. Sometimes you can do it on the daily, whatever works for you, looks good for you. It's a little bit clustered, so you gotta kind of look at it. But and I don't know if you guys know this, but if you click this dead space up through here on any chart, and sometimes you gotta get like in between this pattern thing there. But any place that you can find dead space on the top bar through here, double click that, and that'll zoom in on your chart for you like this, real big. So to find your target profit and buy sell areas, you can look at the midpoint, which is already calculated for you due to that script. And if price is opening right around 113.17, we're actually at about 113.80 right there. Then we can look and say, hey, I see a bunch of support. You see all of these lines? I see a bunch of support right there, or resistance right there in this case. So that's good. We're at 113.80. Yeah, I like. We'll use this level right here. If I can get it lined up in that midpoint, 114.46. That can be a target to the upside. And then if we want another tighter target, we can do 114.13 right there. There was a line right there. So to the downside, we have a bunch of support right through here. You can see there, all that right through there. Draw your support 112.54. You can draw another layer of support. That's all weak looking support. I would draw it right through on that, because if you look at the candlesticks, we got a lot of support right through there. So go back to our 10-minute, and we see we have a couple price targets here. So we're going to, in this case, look for lows breakout. I'm going to draw one more. We got another target right there we can get, because it looks like price can actually hit this. So 114.87. So we got three targets there, and we're going to look for lows to go up, but I'm not going to like silly play, so I'm just going to go to the next day here. All right, and lows did very well. You can see right through here. Price opened up, and it actually started to battle that midline automatically, but you're still watching it for calls, and because you don't have a candle closing below this mid. So price starts to come up here, price closes, and then opens up a green. You could go ahead and get in your trade right there if you wanted. It's a little more risky because you're farther away from that haul, so it's at your discretion. But if you were to get into that, then you could trade it right up to any one of your target prices that you marked up through here. Take your profit anywhere through there, or take a profit at whatever percentage you're happy. One candle might get you 10-20%, because these are 10-minute candles. You're getting big price moves here a lot of the times. But Worst case scenario, you don't sell out at any of your targets. You sell out as soon as price. Either if you're really not comfortable, you can sell as soon as price is breaking below, or a lot of times it's better to wait until price closes below that haul. But once that happens, you would get out of your trade, and at this point, you wouldn't look for puts. And you can still see it followed all your target levels very well throughout the rest of the day. Another good chart is Chewy. Chewy is opening close to the midline here. Switch that to yellow real quick and extend it so I can see. You come to your 90-day 2-hour, and a good target level on Chewy could be, oh, this could be interesting. We got a bit of a gap. So we got a little bit of support, or a little bit of resistance at 22.43. We'll go ahead and mark that just so we can see it. But oh wait, price is open above that, so it'll be support. But realistically, our target could potentially be 23.86 because we have a nice gap fill right through there. Then to the downside, we got a little bit of support right here at 23.20, and then some support right here at 23.04. So these are the levels that we'll watch. We're going to watch for Chewy to potentially go up. We're opening above the midpoint. We're opening above the haul. So we want bullish momentum on it. And fast forward this to the 18th. So what did Chewy do? Chewy used all of our target levels except for one very well. However, we do have a potential trade you could have entered there. It wouldn't necessarily have been the best because price was a little further away from that haul. You would have stayed in that trade. If you didn't sell out at your targets, then you actually inevitably would have lost this trade once price broke above. That might have been a bit of a fake out trade right there, because that does look fairly good as it's coming up. And you could have entered right there and maybe took profit right there, but it's unlikely because that's only a few cent move, and that likely would have went against you. But then as price comes down through here, again, you could have jumped into it and took profit anywhere through here, or if you would have held it through your haul, you would have lost the trade. I'll do one more setup on Chewy here. Price is opening right on the midpoint. So we'll extend that line so I can see it. And go to our 2-hour. We have a line there and a line there. And for support, right there. So we have a little bit tighter of a setup. Originally, we're going to be watching for bullish play because we're above the midpoint. And Chewy went straight up. This was a very good setup. If you bought in all based off that momentum, then you could have took profit at either one of your points. Even if you didn't sell it, pulled all the way back, it held that haul 60, held that midpoint, bounced off it again, hit profit again, hit target profit again, still pulled back, held that 60, bounced up again, hit your other target lines. At this point, you could have went to your chart and draw more target lines if you wanted. Like here's a decent one. But then price still pulled back. It broke here, so that likely would have been a sell. At this point, you wouldn't want to be in the trade anymore, depending on whatever your style of trading is, though. You could have caught that breakout again. I wouldn't have got in that, but because price is above midpoint and breaking out of haul, that tells you it's in a bullish trend. And out of all this, if you want, you can also put Hike and Ashy on your chart, and it will help you a little bit with your exits. But don't be greedy. Take profits at decent levels. I like the 20 to 40% ranges. it's not hard to get it on the 10-minute chart. You just need one or two good candles, and you got that price. There's no reason to sit in that trade for a couple hours or 20, 30, 40, 50 minutes if you don't have to. But definitely not bad if you want to buy a contract and just sit there for a little while and watch it, though. I mean, as you can see here, if you got in Chewy at 23.13, you could have held this contract all the way up until about 23.54. You would have been in that trade most of the day, but because it never broke below that hull, you could have been in that trade the entire time if you wanted. And you can draw these this midpoint plots on any chart, so you can draw your support and resistance based off of any chart that you want. But if anyone has any questions, feel free to let me know, and I'll do my best to help you out further if I have to. I hope everyone understands everything. Thank you.